God's morning to you all. The time is now approximately 10:34 a.m. here in beautiful Chicago. This is my third take. I don't know what's happening with my video uploading. The last video I tried recording, I resized my window and it stopped the video. So hopefully I can make a clean execution this time around. So what we're doing today is just a weekly recap and a look ahead for what's to come for the following week into the rest of the month. And we're not trying to really do much more than that because we really need to see how price develops. So as always, we're starting on the higher time frame. In this case, we're looking at the yearly candle. I'm sorry, bears, but it's not happening this year. We will literally have to, sell off significantly, more than 1,000 points from where we are today to, have some sort of bearish look for the rest of the year. I do think the low of the year is put in. As you can see, when we do have sort of like these big body candles, a retracement is likely, but a close higher is just as likely. And so we got a deep retracement here in 2025, 2026. We just moved a little lower than the 2024 highs before finding a low. And so I don't think there is a bear case likely until 2027, the earliest. Okay. All right. So let's drill into the quarterly time frame. A couple weeks ago, I had a video that again did not upload, but I did mention how I wanted to see a retest of these consolidated highs from 2025. So call it October to about October to um, April 2026. So October 2025, April 2026. This was a consolidated area that I thought we needed to sort of retest to find our way into new highs for the year for 2026. We didn't get it on the Nasdaq futures, but if you go to the cash markets here, QQQ index, we did retest an imbalance that was pretty significant. So on the monthly time frame, as you can see, there was a price gap from April to May. All right, so this gap in price here was reclaimed, it was mitigated, right? It just means that we found acceptance, we found buyers in that area, okay? And we got a strong reaction out of it. And so it's likely that we maybe don't retest this level um, before we put in new highs. But though I didn't get the retest I wanted to see on NASDAQ futures, we did get it here in QQQ, okay? So that's why I think the bottom is in for this little consolidated range. However, that does not mean we are clear to sail for new highs. ES definitely had a different perspective, a different agenda. I do think I do think we will probably come back this month. Again, ES has an imbalance on the monthly, and it's rare to see for the futures contracts to have a monthly imbalance. I expect it from maybe the cash markets, but here that same imbalance exists. So this monthly gap between July and August for ES exists here. And then also an imbalance on ES futures. So my product of choice obviously is Nasdaq, big into tech and everything about it. So I focus my analysis on Nasdaq. Early in my career, all I did was just look at the stock I wanted to trade, or the industry I wanted to trade. Now we clearly look at the big picture. We look at the rest of the markets. We look at sometimes what's even happening, in gold and obviously the bond market. But to hone in on my perspective, I try to primarily focus on what's happening with the price within the asset that I'm interested in. So here, if we move into the weekly time frame, uh, I do like this candle that we put in terms of continuation. However, we did meet a very clear area of resistance, and it's hard to see on the weekly time frame. But if we look at the daily time frame, okay, you'll see that we had this, call it July 6th till about July 15th. So about 10 days of consolidation, um, where we closed below, we peaked back within that range, and then we finally um, found support way, way below. So QQQ, we opened above this range. Actually, the range would be here. That's the high. Let me go back here. All right. So we opened on August 5th above the high of August 4th, peaked above this range, but then we clearly closed back within it. So this is a battleground. This is an area where you can expect price to chop. Okay. Looking at the daily time frame, we get this clear picture that this is momentary resistance. But looking at the weekly, for the bulls, I think what you want to see is a deeper retracement into this weekly candle near the bottom of this range, call it 705 here on QQQ, in order to blast through the highs of this weekly candle. Okay. So 705 is here at the bottom of this range. Um, if we do that, right, I do think we can find ourselves easily above this Wednesday high. The bear case, however, maybe we gap up on Monday, retest the close above this range, and we, get to this next imbalance at 736.40. Okay, there's an imbalance here as well from June to July. We closed here, we opened here. If we get here early this coming week, then I don't anticipate us spending too much time up here. I think we get up here and we, sell through rather quickly. Here's the look on Nasdaq futures. Okay, so we didn't clip the highs here on that same Wednesday candle, but like I said, we don't just look at the instrument we want to trade. We have to get other perspective as well, and QQQ clearly did that. That's how we knew the sells were on, and we retested the low of this range. And so, yeah, looking at this daily candle, it makes me think that we are going to see price open high for the week. Okay. So I think on futures, that's this June 30th candle around, call it 30,530. Okay. If we get up here before we retest the low of this range, then I think we're going to sell through pretty quickly and probably retest the open of this month. All right. So that brings us down here to 28,500 ish, potentially even lower than the low of this month. It just all depends how we open next week. All right. If we don't retrace and we just blast through this range and we come up to this level, then I think the sells are going to be pretty aggressive. And the main reason why I think that is because there's charts like this, right? Here's Meta on the monthly with a clear imbalance. We closed here at 55671, okay? But then the low of this month is only 55936. So that's about a $2.50 difference. And yeah, we don't generally have these imbalances go unmitigated. This one from 2025, April, went unmitigated for quite a while. We actually put in um, a gap up here on May from April, and then it took quite a while to come back and retest it, almost a year exactly, to get back there. So I don't think we can make new highs uh, without first coming back a bit. And again, it's not to say that we're going to sell off in any way. Again, I think the low for the year is in, but I don't think we're going to have a clear path for the tech sector just yet. Uh, when there's candles, monthly candles like the ones we're looking at now. Here's another example. Here's IBM. This one does not have a monthly imbalance, but this massive candle here, when we look at, historically what happens, here's a huge sell-off candle from February 2026. The next month, um, we had an inside candle, another inside candle, and then in May, we swept the low and we made new highs. And similarly, this order block here, um, that my system painted, every time we tested it, we made new highs, right? So this order block is from November 2024, tapped it in April 2025, new highs, tapped it in May 2026, new highs. Here we took out the low of this order block, but again, I definitely think we have a lot of noise to get through to make new highs. So I imagine, we'll need a little more liquidity before we, can find ourselves at these um, new highs on IBM. And a simple, like, you know, Elliott wave analysis, just look at it as, you know, impulse move lower to 180, um, 190, 185. I think I had on a different chart. So that's just my perspective. Again, I could be completely wrong. We could, probably come up, retest, and let me see here. We could do something like this. Come out of here. Whoops. Come out of here. Come here. Come here, and then just like find our path that way. It's possible. That's possible. But my personal opinion, um, I don't think it's likely. Simply because this monthly candle is massive, and yeah, we don't have any real movers in the market for some time. We're really in a wait and see kind of environment with rates. So, just my opinion. But anyway, if you go back to our main vehicle of choice, Nasdaq futures, that's all we're waiting for. Um, we're waiting for one of those two things to happen, either a retest of the low of this range or a break of the range to get our bias. And we're just, playing, any pullbacks or any tests of resistance from there. So intraday traders, try not to stay on the lower time frames. One thing I want to focus on going into this week, though we've been trading well, we've been really spot on with our analysis. We have been taking too many trades, right? So within a 4-hour window, right, this candle is 4 hours. Realistically, one trade, maybe two trades, right? So, a test of resistance, we sell that, and a test of support, we buy that. So if you're taking more than two trades within a 4-hour span, I consider that over trading. And that's my opinion of my own trading. I remember when I switched over to futures, I was primarily an options trader where I would take one trade a week based on the weekly setup, maybe two trades. And coming into futures where you can trade back and forth as much as you want, there is that temptation, but it's not necessary. It's not necessary whatsoever. So here's even, a look at this 1 4 hour candle. This is 290 points. 290 points. On Nasdaq, 5 micros, that's $2,900, right? One mini 10 micros, That's double that. That's almost 6 grand on one 4 hour candle. So if you can literally just keep your analysis, to the highest time frame possible, your odds of being profitable increase that much more. So that's our focus. We'll wait for Monday to kind of see how price is shaping up. We'll see what happens when we get here. I know there's an imbalance, far imbalance here, just meaning we have a soft candle open on this down close candle from Wednesday. We'll see what happens when we get there. Maybe we test that and we sell off. We don't know. We'll see though. All right. So as usual, this is not financial advice. This is a public journal diary for what I am anticipating to happen in the markets and how I am approaching my decisions. Please like, subscribe if you enjoyed this video, and yeah, hopefully I can be more consistent with some content for you guys. I'm doing my analysis personally, in spreadsheets, writing it down, having it in front of me as I trade. But I don't always do a video. I think the videos, are good for me personally, and then also, good for community engagement to help others grow and learn, as I've done over the years, learning from others. And yeah, happy trading. Trade for tomorrow, and best of luck in the markets this coming week. And also, I forgot to mention our data. Our data for this week coming up would be Tuesday, existing home sales, Wednesday, inflation, same thing for Thursday on the, why am I drawing a blank here? Sorry, on the um, producer side. Oh my goodness. All right. Yeah. So consumer side on Wednesday, producer side on Thursday, and then more retail data on Friday. And so I'm thinking volatility picks up depending how Monday and Tuesday go. I think volatility picks up Tuesday night, Globex session, into London session Wednesday morning. Um, you know, could see price gap up as we have seen on some days. But if you're looking for bigger moves, cleaner moves, that's when I anticipate that to happen. But again, we'll just follow and wait and see how things develop. All right, guys. Until next time, peace out.